one, we'll be focusing on directional asset strength and weakness. So getting started with how strength and weakness is derived. So correlated asset strength and weakness is derived of two variations, the higher time frame variation and the lower time frame variation. The higher time frame variation tells you which asset should be stronger and more explosive overall, while the lower time frame variation tells you which asset should be stronger and more explosive upon entry time. So knowing which asset is strongest in your anticipated direction is crucial for capitalizing on price runs. And whenever the higher time frame and lower time frame variation are in agreement, this is where the best and most explosive trades will come from. So getting started with the higher time frame variation. Now there are two ways to go about knowing which asset is likely to be stronger or weaker based off of the higher time frame variation, and it is from either one, higher time frame gaps, or two, a previous look back on narrative time frame candle closures. So looking at higher time frame gaps, weekly time frame gaps, daily time frame gaps, and 4-hour time frame gaps are what you are going to predominantly be using. If you're more of a short-term trader and trade the weekly expansion, then weekly time frame gaps are really going to be your main focus. While if you're a day trader, then daily time frame gaps are going to be your focus. And if you're more of a scalper, then 4-hour time frame gaps are going to be your focus. So if you are expecting a higher time frame gap to be used as a continuation, you can utilize how deep each asset retraces inside of the gap to gauge which asset is strongest and more likely to continue faster. So the utilization of higher time frame gaps for gauging strength and weakness is based off of continuations. So if you're expecting a higher time frame gap to hold and be used as a continuation, you can look at the price action within there and see if how deep price retraces on each asset before the continuation begins to depict which asset is strongest. So let's say that we have a higher time frame gap, and within a triad we have three assets, so asset 1, asset 2, and asset 3. Viewing the price action within each asset for how deep each asset retraces into the gap, that can tell you which asset is likely to be stronger. So in a bearish example like this, let's say this was a bearish fair value gap. Asset 1, we would see that as the strongest asset. Asset 2, we would see that as the neutral asset or the one in the middle. And asset 3, we would see that as the weakest asset for downside continuation. Now, why is asset 1 the strongest? Because it retraced the least, while asset 2 retraced in the middle, and asset 3 retraced the most. So again, if this were a bearish higher time frame gap, the asset that retraces the deepest, we would view that as the weakest asset for the downside. And before the continuation begins, again, this is how you can decipher strength and weakness through gaps. So it would look like something along the lines of this on the higher time frame. So once we have that gap form, whenever price retraces into it, the asset that retraces the least will be the strongest once a lower time frame signature tips its hand for the price run to begin. So narrative time frame candle closures. You can look back 2 candles from the current trading candle to gauge strength and weakness if you suspect a retracement or reversal may be taking place. You're comparing the closures of these candles in regards to depth. If your narrative time frame is the monthly cycle, then you'll be using weekly candles, while if your narrative time frame is the weekly cycle, then you'll be using daily candles. So an example of that would be let's say that candle 3 would be the candle that had just opened, being the current trading candle, and then candle 2 was the previous candle before that one, and then candle 1 is the previous candle before candle 2. So what you're doing is you are comparing the closes of candle 1 and candle 2 if you're suspecting that a reversal or retracement is about to occur. So candle 3 looks back on candle 2, candle 2 looks back on candle 1. Oh. But putting TPD aside for a second, you do not need a TPD to see this. So looking at an example, again, if you have 3 assets within a triad and you're suspecting that a reversal or retracement is about to occur, so you're expecting the current candle, which would be this one right here, to oppose the direction it's already been trading in. So in this example, it would be bearish, so you're expecting this candle to retrace or reverse higher. If you look at the closes between candle 1 and candle 2 in regards to depth, you will see that if we take a look at asset 3, closed closest to the close of candle 1, while asset 2, being the asset in the middle, closed a little bit further compared to these closes, while asset 1 closed the furthest in depth. So using that information, we can infer that asset 3 is likely to be the strongest if a reversal or retracement is likely to take place. So when do you predominantly use this? If there's a lower time frame TPD or SMT and there isn't a TPD within candle 2, like as you can see in this example, but there was a lower time frame SMT or TPD that can give you insight on a reversal or retracement taking place, this is whenever you can use things like this to solidify strength and weakness. So again, asset 1, the close of candle 2 and the close of candle 1, the depth is the greatest out of the other 2 assets, so this one is likely to be weaker if price were to reverse or retrace, while asset 3, the close of candle 2 and the close of candle 1, these closes were the closest together out of all the assets, so this one is more likely to be strongest for a reversal or retracement. And now looking at the lower time frame variations. So the ways to go about gauging strength and weakness for the lower time frame is number 1, the order of operations TPD, and number 2, the daily cycle and below sequential SMT. So getting started with the order of operations TPD. If an order of operations TPD shows itself, we can gauge strength and weakness. If bearish, the asset or assets that create a lower open on candle 3 are more likely to be stronger for the downside. If bullish, the asset or assets that create a higher open on candle 3 are more likely to be stronger for the upside. And now daily cycle, sequential SMT, and below. So an SMT or sequential SMT that forms in the morning session on the daily cycle and below can give us insight on strength and weakness as well. So the asset that creates a failure swing is more likely to expand quicker in the direction of the sequential SMT, while the asset that creates a stop run is more likely to expand slower in the direction of the sequential SMT. So summarizing this video, you can gauge strength and weakness first on the higher time frame, and then you can come into the morning session or your lower time frame chart and wait for a signature and price to tip its hand, and then pair the strength and weakness on both the higher time frame and lower time frame variation to capture those extremely explosive trades. So hopefully you all found this one insightful. I will speak with you all again soon. Good luck and good trading.